Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's keep up with our euro analysis. So actually in the weekend we said that in technical point of view it's nothing really new, and market were standing really in a very tight range the whole previous week, awaiting something. So probably it was the J20 results, and as we said, it's probably the coming week should bring some clarity. We have suggested also that, well, the few moments that we saw on the J20 meeting is that is actually it has relation to the major driving factors. So this is talking on the United States China tariff spiking. So, and as it was let's call it eliminated, but of course this is just the promising of the new discussion, so it's actually nothing, but it has relieved some tension, and as it was one of the driving factors, as investors thought that tariffs should make the negative impact on the United States economy, and that push euro currency higher. So as a result, we said, well, maybe in this as this driving factor is cancelled, at least temporarily, so maybe market should play back some previous upward rally. And indeed, as you can see, as market has opened on Monday, euro has collapsed. So from the technical point of view, we do not something really crucial, because with this drop, market hasn't broken yet our vital support area. Actually, it stands right there. The dropping below this level and continue downward action will significantly decrease the chances on the further upward continuation, even despite this big rally that has happened on the CD leg, because that will be very deep retracement. The market on the way down will break two conference supports on the intraday charts and will drop too low back to the bottom of this, let's call it as the shoulders of this pattern. So it will be, it will not mean that absolutely market will go down, but the attractiveness of the taking long position will decrease significantly. So in this case, it probably will be time for sit on the hands and see what will happen, because that significantly increases the bearish chances and it starts looking bearish. But currently, market stands still on the vital level, and we'll see what will happen there. The big collapse on Monday with this single candle right to the confluence, it's also some warning sign, because it's really too fast for a retracement. But we'll see what will happen. On the daily chart, we still have the upside target XLP, because it stands as a part of our weekly report, and if market indeed is forming something bullish reversal on the weekly chart on the big time frame, market has to proceed high to the 115.50 area and complete the XLP, because here, guys, actually we have the neckline of our large weekly reverse head and shoulders, and if indeed the sentiment and the trend turns bullish on the euro, market has to reach it. If this will not happen, that will put under question the bullish pattern on the weekly, and also it will give the hint that probably market finally will break through the 1185 major weekly support and continue move down. So as you can see, not really big choice for the euro what to do. Either hold here and continue up, or fail here, starting dropping down, and maybe it will be the first hint on the possible downward continuation. That's what we see right now on the euro. On the intraday charts, what we have, actually market stands at our support. Here was our first 1320 conference support. It also was a monthly pivot. You can see pullback here has happened. So it was respected, and pullback here was not really bad. It's approximately 40 pips up. But then market collapsed further, and currently, take a look. Price has hit the XOP, it creates an agreement with the confluence 1268, 1294, an agreement, because this is also a target, and potentially we have guardrails triple to buy. So yes, the downward action is a bit strong, but if market indeed bullish and it has the bullish sentiment, that level is strong enough to keep any retracement. The breaking of this level, so breaking of the agreement with the confluence support, well, the bullish market should not do this. So it will be a really warning sign. So if you would like to go long in this area, you could position yourself either on this guardrails triple to buy, or what will be better, I suppose, just drop your time frame and see what will happen on the hourly chart, maybe on the 30-minute chart with this area. It would be better if you will see some bullish reversal pattern, maybe bottom line will be formed, or guardrails triple to buy, reverse hand shoulders, or something on that sort. So at this point, this will be much better. But as John Napoli tells, the confluence support, and especially agreement with the confluence, is a directional indicator by itself, and it could be used for taking the position. But I think that some insurance is not really a bad thing, and if we will get also some bullish reversal pattern here, it will be just another advantage for us. On the hourly chart, we have also minor AB equals CD. CD leg shows the acceleration down. Here is it's completed, so we have the AB CD rate and OP. Currently, I do not see yet any bullish reversal patterns. So this is not double repo. So if you place here the moving average, that's not really sufficient for us down. It's too small. Here I do not see also some bullish continuation pattern. Maybe double bottom will be formed here or something of that sort. But potentially that's an area, if market indeed bullish, it's an area where market should and could turn to the upside action. Our triangle here that we discussed on Thursday last week indeed has been broken up. When we talk about the free drive rule, if you remember, that market do not want to go low, it means that market should go high, and indeed that has happened. But later on Friday, this breakout was not lasting too long, and market has dropped back down. So that's our view on the euro. Let's see what will happen. Currently for us is a critical moment is to see what will happen at our confluence support. You can see this support stands relatively wide, and market could float around it, so it has a lot of room to create some pattern here. So that's what we will keep an eye on within the few sessions probably.